In the meantime, let's get more before we go to the Bank of Queensland Chief Executive and talk about the market with Chris Conway. He joins us from the Australian Stock Report live out of Melbourne. Chris, a nice gain for the market today, 0.6%. That's really two in a row now. What do you make of it?
Good morning. Good afternoon, Ingrid. Yes, it is two in a row. I think the gains we're seeing today are largely due to the big surge we saw in oil prices overnight. Obviously, we all know about the correlation between oil and equity markets of late. So yeah, definitely nice to see some follow through on the back of the gains that we saw yesterday. But our suggestion to clients this morning is that they really temper their enthusiasm around the rise in oil prices overnight, and that's because we see it as being due to the structural, no change in the structural issues in the oil market, but more seasonal demand due to the driving season in the Northern Hemisphere. So some signs of that coming through. So yeah, we'd all like to see, obviously, oil prices moving higher because the expectation is that equity markets will move higher in unison, but we think this is not suggestive of structural changes in the supply-demand dynamics in the oil market.
So you've said to me before that you're sort of sitting on your hands at the moment in terms of trade. Why are you not wanting to sort of get in and use opportunities? Is it because of that oil price? I mean, just talk us through why you are sitting on your hands at the moment.
Yeah, so it is definitely to do with the oil price, which is reflected in the fact that the ASX 200 over the last 6 months has really moved in a broad range, but moved sideways. So when you've got that directionless market, and you're not seeing the possibility for any stock that you get into to continue in the direction that you want, from a holistic level, it makes trading. Or makes you less likely to trade, I should say. What we are still looking for is really compelling and, more importantly, sustainable growth stories. So we're being overly critical now on any stock that we look at, and if it meets those requirements, then yes, we're happy to be long. But aside from that, there's nothing really that interests us greatly. So yeah, it is definitely the oil prices and the correlation between oil and equities, and the fact that we've got a directionless market for the most part at the time for the time being.
All right, well, let's talk Arrium, because this has obviously been a shocking story really for those in Whyalla, given what's going on there, but it really has broader implications across the board as well. We knew, I guess, this was coming yesterday when shares were suspended. What do you take out of it?
Yeah, well, you're 100% right. We did see it coming. I have a number of friends who work in the steel industry, and whilst this is only anecdotal evidence that I'm giving you now, they have been saying for quite some time that the Australian steel industry is simply not competitive because we can't compete with China from a price point perspective. That's not something that's likely to change. We all know about the fact that Chinese mills are overproducing and dumping that supply into Australia. So a dark day for Australian steel, one that's been on the cards for a while. However, feel sorry for the people of Whyalla and anyone that's in the gun potentially to lose their jobs. It is a sad story, but if the industry is not going to be competitive moving forward, and I suggest that it won't be, well, it will go the same way as the Australian car industry, unfortunate though it is.
So who else is sort of, I guess, to watch next to follow in Arrium's footsteps?
Yeah, so Atlas Iron is the one that immediately springs to mind, simply because of the level of debt that they carry and the fact that they're operating on very, very tight margins. But it's really any company that has taken on a great deal of debt, most likely at the top of the commodities price cycle, and now due to much lower commodity prices, is simply unable to sustain their debt levels. But it's got to be critical. Someone like BHP, obviously that scenario is in play for them as well, but they've got such a buffer that they can afford to ride it out and wait for the commodity cycle to turn once more. So it's really any company that fits that profile, and the suggestion that we've been making to our clients this morning is that any of those marginal producers that they have in their portfolio and have continued to hold, even against our advice throughout the downturn in commodities prices, that they seriously consider removing those positions from their portfolio.
Arrium was in a different position to some of those, though, to some of its competitors here, right? I mean, just in terms of the location, of the premium paid there, and just given, I guess, some of the inefficiencies. Is it different? I mean, when you look at it, some of its main competitors, is it a different story?
Yeah, I think so. One of the points that was raised by another analyst who has been on the show this morning was the fact of the location of Whyalla and the transportation costs, which make it even more prohibitive for Arrium to turn a profit from that division. So yes, they are all elements that feed into the overall picture. And indeed, some of them are unique to Arrium. But again, I guess if you want to bottom line it, it's really about unsustainable debt levels given the current commodity price, or where commodity prices currently lie, and the fact that, I think more importantly, this may be something that is ongoing for an extended period of time. Of course, the further we go out in time and the longer commodity prices remain lower than, well, the expectations that were baked in previously to numbers, it's more and more difficult for these companies to generate cash flow and continue servicing their debt.
Now, you mentioned Atlas Iron. Just a couple of days ago, they did that debt restructure, and the stock's down 9% today, which obviously doesn't take much to move it at these levels. It's only a 2.1 cent stock, but still a 9% fall. Do you relate that directly to what's going on at Arrium?
Yeah, 100%. I looked with interest at the AGO stock price this morning, and I would directly relate it to what's going on with Arrium. And like I said, that was the one that immediately came to mind. You know, of the expectation that someone might ask me the question today, you know, what are the other stocks that fit the Arrium profile? So, yeah, I think it's directly related. Iron ore was little moved overnight, so I think it's definitely related to that Arrium story. All
right, Chris, really appreciate your time on the program as always. Thanks.
Thanks, Ingrid.
Chris Conway there from Australian Stock Report. And as mentioned, of course, the market up by 0.6%. Nice rally today, 4,977, creeping back towards that 5,000 level.